Real estate has long been one of the most reliable ways to build wealth, yet many people still believe it's only for those with deep pockets. In 2026, that perception is outdated. Technology, financial innovation, and creative investment strategies now make it possible to start investing in real estate with just a few $100s. Small investors can access opportunities that were once reserved for the wealthy, from real estate investment trusts, REITs, and crowdfunding platforms to fractional ownership and creative financing. The key to real estate success today understands how to generate passive income money earned regularly with minimal day-to-day involvement. With the right approach, even a small investment can grow into a steady cash flow that covers expenses, builds equity, and compounds over time. Modern tools allow investors to diversify across multiple properties, sectors, and locations without the need for large upfront capital or complex property management. This video explains 7 actionable strategies for investing in real estate with limited funds, showing how small investments today can become significant passive income streams tomorrow. Whether you're a beginner or looking to expand your portfolio, these techniques provide practical, scalable ways to start earning from real estate now. Let's watch. 1. Real estate investment trusts, REITs. The easiest entry point. One of the most beginner-friendly ways to invest in real estate with small money is through real estate investment trusts, REITs. REITs are companies that own, operate, or finance income-producing properties such as apartments, office buildings, warehouses, and data centers. Unlike buying a physical property, you don't need to buy an entire building. You buy shares in a REIT, just like purchasing stock. In return, you earn dividends that come from the rental income and profits generated by the underlying properties. Publicly traded REITs are extremely liquid, meaning you can buy and sell shares anytime through a brokerage account. This makes them ideal for investors who want exposure to real estate without the hassle of property management. 2. Real estate crowdfunding. Invest in projects with $100 or less. Real estate crowdfunding has transformed how people access property investments. Thanks to online platforms, you can now invest in individual real estate deals with as little as $100. Platforms such as Fundrise, CrowdStreet, and others allow investors to browse a marketplace of residential, commercial, and mixed-use real estate projects. Once you choose a project, you can invest your amount, join other investors, and share in the returns. Crowdfunding deals typically offer 2 types of returns: rental income distributions and capital appreciation when the property is sold. Many platforms provide projected cash flow estimates, location analytics, and professional underwriting, helping you make more informed decisions. 3. Fractional ownership and tokenized real estate. A newer innovation that's gaining traction is fractional ownership combined with blockchain tokenization. Tokenized real estate allows properties to be divided into digital tokens that represent ownership shares. These tokens can be bought, traded, and sold on compliant marketplaces. Fractional ownership works similarly to crowdfunding, but is often more flexible because it allows investors to own a specific percentage of a property and trade those shares more freely. This is especially popular in markets like luxury real estate, vacation homes, and international properties. Tokenization also introduces higher liquidity than traditional real estate holdings. In 2026, platforms offering tokenized real estate are attracting small investors who want to diversify their portfolios globally and earn rental income proportional to their ownership share. 4. House hacking and shared living arrangements. While digital models have expanded access, traditional tactics like house hacking remain relevant and highly effective. House hacking involves buying a property and renting out part of it while living in another part. For example, you might purchase a duplex, triplex, or fourplex with a low down payment loan and rent out the other units to cover your mortgage. In many markets today, programs like FHA loans in the US or similar government-supported mortgage products elsewhere allow down payments as low as 3.5%. This makes it feasible for someone with limited savings to own a multi-unit home that generates rental income. Shared living arrangements, co-living spaces, and short-term rentals on platforms like Airbnb or VRBO also provide opportunities to maximize income from the same property. 5. Joint ventures and partnerships. Investing alone isn't the only path. Many small money investors turn to joint ventures and partnerships to co-own properties with others. This can involve pooling resources with friends, family, or other investors who bring different strengths such as capital, expertise, or access to deals. Formal agreements outline ownership percentages, responsibilities, profit splits, and exit strategies. This strategy allows small investors to participate in larger residential or even commercial deals that would be unaffordable solo. Experienced partners can offer mentorship, help with negotiations, or provide access to favorable financing. For individuals without much capital, partnering strategically can accelerate growth and move you into higher value assets faster than going it alone. 6. Creative financing and low down payment loans. Real estate investing doesn't always require cash. Creative financing techniques and modern mortgage products have opened doors for investors with limited savings. Options such as seller financing, lease options, rent-to-own agreements, and low down payment loans allow investors to acquire property with minimal upfront cash. Government-backed programs, community lending initiatives, and fintech lending platforms have expanded access to mortgages with small down payments. Additionally, peer-to-peer lending marketplaces let investors borrow directly from individuals, often with more flexible terms than traditional banks. Creative deal structures like negotiating for the seller to carry the mortgage or agreeing to purchase the property in stages can lower the capital needed at closing. While these techniques require strong negotiation skills and legal understanding, they provide avenues for committed investors to start building real estate portfolios even with small funds. 7. Scaling your portfolio for long-term passive income. Once you begin generating income from your initial investments, scaling becomes the key to long-term passive income. Reinvesting dividends from REITs, earnings from crowdfunding projects, or rental income from house hacks allows your real estate exposure to grow exponentially. Diversification across property types, locations, and investment vehicles reduces risk and stabilizes returns. Property management services and technology platforms now make running rental properties more efficient, turning real estate into a semi-passive income stream. With disciplined reinvestment, strategic diversification, and ongoing education, small money real estate investors can build sustainable passive income streams that rival traditional employment income. Conclusion: investing in real estate with small money is no longer a distant dream. Thanks to technological innovation, financial products, and community-driven platforms, individuals with limited capital can participate in property markets, earn passive income, and build long-term wealth. From REITs and crowdfunding to fractional ownership, house hacking, and creative financing, there are multiple pathways tailored to different goals and risk tolerances. The core principles are accessibility, diversification, and consistency. By starting small, making informed decisions, and reinvesting earnings, even modest investments can compound into meaningful income streams. Real estate remains one of the most powerful vehicles for wealth building, and with the right strategies, anyone can start earning $1,000 or more per month while building a secure financial future. Let us know in the comments what you think about the invest in real estate with small money. And now, passive income explained, and don't forget to like, subscribe, and stay tuned for more captivating content on our YouTube channel.